Music. Are we live?
We're
We're
live.
live. We are live. Hey, boys and girls.
What's
It's,
up? What's up?
welcome to, oh, we can do this. Welcome to a moment with the real estate guy. Let's see.
Like that.
Here we go. Here we go. What is this? This is one of my songs from back in the day.
Let's go. What is it? I'm excited.
It's called Listen to Your Sin. That's me singing.
No way.
Yeah. I got a development deal with Metal Blade Records.
Wow, man, you got a lot of stuff I don't know about you, huh?
Oh, yeah. All kinds of stuff people don't know about me, man.
Yeah, right on.
I love this song. This is a good song. A song called Listen to Your Sin.
Mm-hmm.
Here we go. Yeah, so that's Listen to Your Sin. This is a moment with the real estate guy. Today we have on with us Mike Atwell.
What's up, everybody?
Eureka Mortgage now? Is that your new home?
Eureka Mortgage Lending. Yes, sir. That's it. Yep.
Eureka Home. Don't call me sir, man. I'm not your dad.
Eureka.
Eureka Mortgage. So what's going on in Mike's world?
Not much, man. Yeah, like you said, just rolled out to a new company, Eureka Mortgage.
Yeah.
Same kind of deal, moved over to the broker world, which is super exciting on our end. All that really means is we got a big different pool of products that we have. We're able to kind of shop around to different companies to get the best deal. Same great service we offer. Besides that, man, a lot of stuff going on in the personal world over here. Looking at buying a house myself, me and my wife, who's 9+ months pregnant right now.
I thought, wait. I thought you already owned a house.
I do. I own my house. I bought my house in South Scottsdale in 2015.
So North Tempe.
North Tempe,
Yeah,
South
yeah.
Scottsdale. Yeah, right on the edge. 2015, when I was single and she moved in there and we're just bursting at the seams, man. We're about 1,600 square feet. And when I say we're bursting at the seams, I mean, she's bursting at the
Right.
seams. So with all her shit that she has, you know, so yeah, we got a place. So it's best case scenario. We're
Gotcha.
not selling our place, so we kind of have our opportunity to take our time, find the
Yeah.
right place, find whatever we need, shop around, and like I said, about to have the baby, and I'm like, why don't we just get a puppy too or something? Maybe I'll buy a new car. Who knows? Why don't we just throw it all in there?
Just pile it on, man. Just pile
Why
it.
not? Just throw all the
now,
stress.
back up a little bit because you were talking about Eureka Mortgage and you talked about you're a broker. So most people don't understand the difference between brokers and banks. And banks I refer to as Bank of America, Chase, Wells Fargo.
Correct.
Why is Siri paying attention? Stop. So those are banks, right?
Yeah.
Traditional banks, credit unions. So what you have program wise with banks, because I get a lot of people that will come to me already approved and, oh, my credit union approved me, or I got approved from Rocket Mortgage, or I got approved from Veterans United. Those are big box banks, right?
Exactly. You're exactly right.
So the big box banks, they're limited to what they can do based on the programs that the bank itself offers to their customers.
You're exactly right, Chris.
Okay.
Yeah, it's a little kind of black and white. Hey,
right.
I got 10 to 20% down. I want to buy a primary. I want this. They go to their credit union. They go to their bank. They got these products. The great thing about and banks are solid, and especially if you do have a relationship with a bank, say Chase or something in there, and you got a bunch of money with them. Sometimes people will come to me with a loan estimate from Chase, and I'll go, "This kicks ass. Go with them."
But I'm going to stop you there. We as professional realtors, listing agents, we don't like Chase and Wells Fargo and B of A and credit unions because they're slower. Their rates are usually higher. Their fees are usually a bit higher. They don't do the due diligence I've found that brokers do, because you walk into the bank. If I walked in the B of A and said, hey, I want to get approved to purchase a home, they're just going to have a conversation with me. Exactly. Give me a pre-qual letter. They're not going to dive down the rabbit hole like you guys do.
Exactly.
To make sure you're 100, and follow this, boys and girls, if you're watching on YouTube right now or you're tuning in later. You want to be 100% approved when you're going out to shop for a home. You don't want to be stressed. You don't want any, well, can I afford an extra 10 grand? You want to go to somebody like Mike, and he's going to explain what brokers do, and get fully approved. So then you're going around now with me looking at houses with what we call a debit card that's fully loaded for $500,000. All we have to do is find you a house, get it under contract, and have it appraised, and we're good. That's what Mike does. So Mike's going to explain the difference between what a broker does and a bank does, even though I just kind of told you what a bank does. So now, Mike, tell the world what a broker does.
And Chris, one important thing I think you left out is,
Okay.
but you kind of did say it, is that the banks aren't personalized to you. Maybe
Right,
you'll call
they're not.
Chase. Maybe you'll call Chase to get a pre-approval, and guess what? The next day you call back to check on your pre-approval, you're talking to someone else. And day 3, you're talking to someone else. Oh, wait, I just explained this to him. It's not personalized. With me, with brokers, where it's personalized, we really want to get to the bottom of everything. We don't want to just make it transactional. We are building a relationship for you and really figuring out what's going to be best for you. And then Chris was exactly right. Once we give you that prequal, now you know you have that purchasing power. Maybe it might take us a little bit to get there. Maybe we see what's best for you. Hey, we got to get your credit score up a little bit. Hey, we got to pay off a little bit of debt. But now you're sure that you're not wasting your own time. You're not wasting Chris's time. You're not wasting my time. You know exactly what you're approved for, and you have that purchasing power to go out and do it. So I think that's another big thing that we push is the personalization of brokers. You're working one-on-one with me. You have my cell phone number. If it's Saturday at 9:00, you think you're getting a hold of your guy at Chase? You're not. You're getting a hold of me anytime, anywhere. It's become a problem almost. I'll walk away from the dinner table a lot of times. But
well, so you need to set up rules then, man, because especially with the baby coming. So
you're right. Yep.
my rule after my second year in real estate, I came home one afternoon, like 5 o'clock or something, waved to Nikki, went into my office, came out at 9, and she had that look like, what the so I was like, okay, how's this? Look. Right? So it's like, okay, how's this? No, after 7 or on Sundays, I don't answer my phone. You can text me, you can email me. The only way that changes is if I'm in the middle of a negotiation with a client and or another realtor on a property that I'm either selling or representing the buyer. Other than that, and I actually I'll have clients call me up at 7:05 and the voicemails, hey Chris, it's Mike. I know it's 7:05, man. I know you're not going to call me back tonight, but I just have a question. I promise it's nothing crazy. Yeah. So I'll listen to the voicemail and then I'll text Mike, hey, what was your question? And then they'll tell me the question. Well, here's your answer.
And you're exactly right. You got to set those parameters,
set the boundaries,
and those boundaries. But what if there is an emergency? What if you are emergency, right? What if you are in the middle of a transaction and they go, hey, they got 2 other offers in. I know my pre-quals for 500. I need one for 515. Can you do it? It depends on this. We'll take those transactionally, right?
Sure.
But you're exactly right. So I think that's one of the biggest things with us, as opposed to those other things that you were going to, and I can get into that as well.
Well, and the way I play the game, because a lot of people don't want the full blown approval amount on a pre-qual, where I don't think it matters. I think if I have a client who's approved for $600,000 and we're buying a house that's $500,000 and the pre-qual says $600,000. From a listing agent standpoint, I like that because it shows me, okay, this guy's approved to 6. He's only spending 5. This is a no-brainer. And then I always call the lenders and I ask them the questions, hey, have you pulled credit? Have you given the good faith? Have you given, looked at their credit report, looked at their taxes, things like that, because I've done it long enough. I actually had a lender lie, and all the pre-qual was legit. The gift documentation, the income, the assets, the savings, like everything was checked how you want it to be checked. Okay. Everything. We passed the inspection period. We passed the appraisal. We're like 10 days from closing. I get a loan denial letter. Wow. Based on the borrower's inability to be approved for the amount they were financing. Yet going back to the pre-qual letter and all the LSUs, that box was always checked yes. Yep. And so I called BS, and we fought.
And that's a waste of time. And you'll see that happen a lot. People do the bare minimum, where they just get someone's bare documents in. They run it through their system real quick, or they don't even run it through the system. They're taking the client's word for it, which is fine. We want to trust the clients, but sometimes the clients are unaware, and we have to coach them through. Hey, I make $200,000. That's fine, but you also have 3 cars with $800 car payments. So that's cutting into your debt to income a little bit. We want to make sure. I'm not doing this because I want to be a pain in the butt. I want to do this because I don't want to waste your time. I don't want you looking at $600,000 properties if you could afford $400,000. On the other hand, I don't want you looking at 600 if you could afford 800 and you want to go that high, right? So that's really what's important about doing the due diligence. And a lot of experienced realtors like yourself, Chris, won't take clients out unless they have that pre-qual at their disposal for good reason. you know, you don't want to go around and waste your time or the client's time at all.
True. Yeah, true story. Okay. I have a listing in Phoenix, gorgeous home, almost $600,000. Realtor showed it 3 times, right? 3 times. Asked me all kinds of questions each time. Finally sends an offer, $110,000 below list price because that's all her client could afford.
Of course.
It's one of those companies that have 3 letters in their name.
Yep.
You know what I mean? The middle one,
I do.
you know,
Yep.
the
I
middle
do.
one's kind of like we play tic-tac-toe, you
Yeah.
know, or X marks the spot. And I was just like, number one, if your client's only approved for 490, why are you showing him my listing?
You're wasting everyone's time.
Well, because family, I don't care.
Sorry, we
Don't care. Oh, and then they wanted $20,000 in concessions.
Of course they do.
Right?
And they want a new couch too for you to buy them, right?
Right. So the same listing, okay? I had a showing last night, and so agent and I are talking back and forth. He gives me feedback this morning, indicates in feedback that they love the house, they want to do something, but they have to go talk to the lender. Okay. Why are you talking to the lender after you've fallen
Why
for the house?
Why have you not already done this? Why have you not already talked to a lender?
That's the thing that people don't understand. For those of you that like Zillow, you're going to call Zillow, and the Zillow agent is not allowed to ask you where you're at in the home buying process. They have to say, yes, I'll meet you there in 5 minutes. The problem is, when you meet them there in 5 minutes and they love the house, they're not approved. They haven't started the financing process. So then you're behind the 8 ball because somebody else is going to come and love that house just as much as you do, whether it's today, tomorrow, or a week from now. But like Mike said, you're heavy loaded up front to be fully approved. But the reason you're heavy loaded up front, and because you're fully approved, once Mike gives us the pre-approval letter, we're fully approved. There's no question. There's no surprises. There's no stress. It's go get Chris, go find a house. You're done with me until we get under contract.
Yeah, and I know I've said it 3 times, but I want to hammer it home. This isn't just for us. This is for the client as well. We don't want to. You're wasting your own time. Additionally, it's not just how much you could be approved for. We don't just send you a pre-approval. We send you an estimated fee sheet. That's going to break down what the rates are, your potential monthly payment, your cash to close. So it's not just an approval. With that approval comes this fee sheet. You could very well be able to afford a $500,000 house. And then when you get that fee sheet, you go, holy crap, I forgot about mortgage insurance. Oh, I forgot about my taxes. Oh, wow, it's a little bit more than I expected. Okay, let's break it down. Let's give you an approval for 400. Or you can get it. The same also applies, right? Oh, this is way better than I thought. Let's go up to 600. Let's see what that looks like. So to hammer that home, the personalization of brokers is really the most solid thing as opposed to banks. You know, I would give, if you have a great relationship with your bank, it never hurts to talk to your bank if you need to talk to them, and talk to a broker too. It's completely free to get approved. It's completely free to go through the application process. And going back to what Chris was initially stating, what we do as brokers, banks have their specific products that they have. They hold and they fund their loans in house. Okay, so they keep those cash, those mortgage-backed securities, in their actual bank. What we do is we take your specific situation and we shop it to everyone. We shop it around to every bank, every company, every investor that we have, and then we're not only able to do those regular, conventional FHA government-backed loans. We have a lot of funky outside the box stuff that those banks can't do, and I can get into what those products are, but there's just a lot more in our box of products that we have.
There was something I'm going to ask you, and it slipped my mind. Damn it, I don't remember now. I hate when that happens. I hate when that happens because it was a good question, and it was you know. Damn it, man.
It'll come
back to me. It will.
Yeah.
It will.
Yeah, but again,
okay. Well, here's one.
Yeah.
What is, because you get all kinds of different stories with this. Let's talk a little bit about FHA. What's the FHA purchase power right now?
FHA purchase prior is $560,000 loan.
Okay, to put that in perspective, kids, when I bought my first house in 2000, it was $136,000.
Wow, Chris, even when I think even 6 years ago when I started, it was in the 300s. It's crazy. It seems like it's going up 50 grand every 6 months now.
Yeah. So what's the minimum FICO score for FHA?
Minimum FICO score for FHA is 580 usually, but even saying that, you don't want to put people in a box because we have products that can go lower. But yeah, usually for an FHA government backed loan, you got to have a 580 or above.
And that's been the same forever. I don't remember it being lower than that, but that's why I asked, because some people don't know.
That's been the same, but don't let that scare you away if you have
Right.
a 580 credit score from not coming and chatting with me. Because just because we can't get you into an FHA back loan, we have
Right.
no credit score loans. We have people. I just had a situation a couple weeks ago where older lady, 82 years old, owns her current home free and clear.
Nice.
Her husband just passed away. Husband passed away, and her husband was doing everything. He was paying the bills. The cars were in her name. Everything for life.
Yeah.
She had solid income. She was receiving retirement and Social Security. She was making like 7,500 a month.
Nice.
Ran her credit, no credit scores, just because she didn't have the ability to.
Right.
She just never had a credit card. So a few different things we were able to do. Hey, go out and get a credit card and start putting stuff on it. She's 83 years old.
Yeah.
She's not going to start doing that. So we were
Yeah.
able to find her a no credit score program. So if you have under 580, or if you don't have a credit score, don't let that scare you. But for this specific situation, for FHA loans, yeah, it's a 580 minimum.
Now, so to piggyback off that, because FHA, the one cool thing about FHA is the programs they have to assist with down payment.
Mm-hmm.
So for that caveat, is there going to be programs that allow without the credit, like you said, or is it tied to credit, income, debt to income ratios?
Usually for down payment assistance, there's usually is a credit score a requirement. There's usually an average medium income requirement, which you got to be below that the AMI, average medium income.
Yeah.
So they're usually for the down payment assistance programs. There are some stuff, but even so, there's some outside of the box stuff, Chris, and you as a realtor know this, right?
Yeah.
What we could do, hey, they're having a little bit of trouble coming up with that 3 to 5%. Maybe we raise the purchase price of the home a little bit, and we ask the seller to give them a credit and use that credit towards closing costs. So there's a lot of stuff that Chris, you and I both can come up with for our clients that may be strapped on cash.
Yeah.
But I think that's another huge thing that people got to realize. This is the main thing I get when I talk to people. Well, I don't have 20%.
Right. Well, who said you need it?
You do not need anything near 20%.
Right.
Between 0 and 5% is the minimum for the most part. 20% is like a lower percentage of clients, and that's great to have. Obviously, it lowers your mortgage payment, and you don't have mortgage insurance. But everyone needs to keep that in your heads that you do not need that 20% to come in with for a down payment.
Now, with the FHA and the down payment programs that I referenced, because again, before COVID hit, my bread and butter was first-time home buyers. Like all day long, I could get a first-time home buyer into a house for $3,000 total out-of-pocket cost.
Yep.
And this was something I did for decades. I mean, 25 years doing this, and really, until COVID hit, 20, 25 deals out of my production every year, which was, hovered around 45 to 50, was always first-time home buyers. So so the Nehemiah program, the Ameridream program, the HUD homes, the 500 down, the 100 down, all the different FHA grant programs that have been available throughout the years, been there, done that. So right now, is there any type of, Amazon could just be serial killers, man. They just show up and just
anytime they want. No privacy anymore.
Right. I was like, what is that behind me? And then I see him walk, and it's like, the perfect serial killer would be an Amazon driver. So the FHA product, okay, like, correct me if I'm wrong, but for typical grant programs, if they're available, you got to have at least a 640 FICO score for FHA. Is that still the case? Okay.
Usually there is, and there's area specific grants as well.
Right.
And those all kind of change depending on the area you're in.
Sure. So is there anything right now that's relevant to a first time home buyer tied to FHA that would help offset the down payment and closing costs?
I would say that it's ever changing, Chris. So it's always, I don't want to quote something right now because a lot of the down payment assistance programs in Arizona specifically, they fill up and then they use that bucket and they're not available anymore.
Right.
So the best thing to do would just ask your advisor what's available at that moment. What's available today could be different than when we chat next week. Sure. And also there could be, like I mentioned, area specific grants. So you want to send me maybe a zip code if you're looking in. I could send you an actual snippet from the grant website and saying, hey, in this area, there's $3,000 grants, 5,000 grants, 10,000 grants in this
Cool.
area. And that may affect where you want to look. And,
Yeah.
depending if you can get all of your closing costs paid for or credit toward to buy down your rate or something like that.
Yeah. So with the grant programs, they're typically just tied to FHA, correct?
Yes. So if it's going to be a down payment assistance program, it's usually going to be an FHA. So it's government backed. Correct.
Okay.
Yep.
And then, so is USDA still around?
Yeah, of course. Yeah. USDA is still
Okay.
around, and that's a super, super solid one.
It is.
USDA is for people that don't know, it's for rural areas, kind of like
Right.
farmland areas. And I compare it to VA loans, how great they are. Can come up to 0% down on USDA loans.
Yeah.
Really solid rates on those. But again, those are area specific. And
right.
those would be like kind of out in the country and stuff
Florence,
like
parts of Florence, parts of. Now, is it? I know you can correct me if I'm wrong here. Again, this is all about educating the people who are watching and listening, et cetera. So USDA rural area financing, it can be 0%, 100% financing, which I've known. I've done a few of them in my day. I haven't done any Life is Late. But is it based on population of the location, or is it based on where it's at rural wise?
It rural wise. It's based on rural.
Okay.
Now that usually correlates to population, right?
Sure.
You're going to have for these rural areas, you're going to have, and specifically per the USDA website, I'm not sure if they base it on specifically on the population, but it is pretty much just a map that they show, and it's usually going to be areas with less population for sure.
Right, because the times that I've done USDA, it was when Queen Creek and Santan Valley were just starting up, Maricopa was just starting up. Some pockets in Florence, and I think some pockets of Florence would still apply. Eloy, I'm sure, because Eli's out there, Coolidge is out there, Arizona City's out there. So it's not a product you can use for the Phoenix metro area for those
exactly.
Like,
It's not. But don't let that scare you away and think, dang, I'm getting ripped off, because man, there's products for everyone and every person.
Right.
And it's amazing. It's like you said, Chris, it's all about educating the people, and you don't know what you don't know. And there's so many people that think there's a conventional loan, there's an FHA loan, I need 20% down, I need to save. Man, there's everything. We got everything. The down payment assistance you can get, the grants you can get. If you're looking to be an investor, the DSCR loans and the fix and flip, man, there's everything. It'll make your head spin how many products there are.
So we've talked FHA, we've talked USDA.
Mm-hmm.
So VA is pretty self-explanatory. It's for a veteran. They're 100% financing. What costs, because again, we're educating the world here, what costs is a VA buyer not allowed to pay in a transaction?
So there's a few things that apply to a VA loan that could also be applied to an FHA loan. There's that people do got to be aware of. With an FHA loan, there is what we call a one-time upfront mortgage insurance premium. So keep that in the back of your head too. There is a one-time fee because it is a government-backed program. The thing that would be similar to this in a VA would be the VA funding fee. So there is a one-time VA funding fee.
Right.
But if you are up to 75% disabled, you do get that waived. And there are some funky things that go into a VA loan, like you do need a pest control on the property. You do need, so it really is basis by basis. And these are things that we make sure not to leave out when I'm talking to a client for the first time. And I let them know. I'll have some lenders that'll kind of just leave out that upfront mortgage insurance premium in the FHA loan and just push, hey, look we're giving you lower rates. Yeah, we are giving you lower rates. And at the end of the day, does it matter that 1.75% of the purchase price is going to be put on the back end of the loan? Probably not, but we want to make sure you're aware of it.
Is that the FHA percentage?
It's 1.75% of the loan amount.
Right. And then the VA, and the VA, is that still 2.
Yeah, 2.25, unless it could go down based on your entitlement that you have and based on your percentage of your entitlement you have. So it's between 2.2 and 1.75 as well. Okay. If you are, there's some ways that you can get.
And
that.
If you're disabled, that you get a little bit more break.
Exactly.
Right.
Exactly. Yep.
So those are the three kind of government type products, right? The FHA, VA, and USDA. So let's talk conventional, because conventional, it's anywhere from zero, 50% down. It's
Yep.
the better credit score you have, the better products are going to be available to you.
Yeah.
Right. The lower
Yep.
rates. So what's a typical conventional mortgage that you say, if I said, hey Mike, you got 100 people here doing financing, and out of those 100 people, what's the most common conventional financing program you're working with?
Sure. Well, just a regular conventional financing program is what it would be, Chris. But there's a lot of variables, and it's just like you said. It's based on your debt to income. You'll hear me say that a lot, and I'm sure your listeners know what that is. But I'll just break it down real
Break it
briefly.
down. Yes.
What your debt to income is. This is one of the most important things: your credit score, your income, your down payment amount, and your down payment source, and your debt to income. Always think of this, guys. Your debt to income is very important, and it's as simple as it sounds. It's your monthly debts versus your monthly income. And when I say monthly debts, I'm not meaning your grocery bill and your cell phone bill. I'm meaning your revolving debts, meaning your revolving credit card debts, car payments, your mortgage if you have it. Say you're going to buy a second home, put that in there as well. And for an easy number, we want to keep that debt to income under 50%. So your monthly debts, half of what your monthly income is for a
Gotcha.
good number. It can
Yeah.
go up to 57% for FHA and VA, down to 47% or so for conventional. But
Okay.
again, for a conventional loan, everyone thinks, oh, this is the big one. This is where you
Right.
got to have a great credit score. You need to
Right.
come in with a bunch of money. Also not true. It does help to have a better credit score. Of course, you get better rates. But again, we're the first time home buyer, our home ready program, between 3 and 5% for conventional. And
Okay.
we could even, there are some, again, outside of the box, the things that we could do to help you with credits or buy downs for that.
So there are. Okay. Go ahead. Go ahead.
What I
Go
will
ahead.
say, what you got to remember about a difference between FHA and conventional. If you come in with less than 20% down on a conventional loan, you're going to have what we call mortgage insurance. That's a monthly payment that you're going to have. Once you hit 20% equity paid off in your home and you have a conventional loan, that mortgage insurance is automatically going to fall off. You'll see it less, $150 less on your monthly payment each month. If
Nice.
you do come in with 20%, you don't have that mortgage insurance at all. FHA, you have that upfront mortgage insurance premium I talked about. Don't have that on conventional.
Right.
And you have mortgage insurance for the life of the loan. Okay. Not to say we can't, once you hit 20% equity, we can't refinance you into a conventional loan, which we'll obviously look at doing. But those are just some funky things to look at. A lot of the times with people who are conventional, they're coming in with 20%, they got a higher credit score, they don't want those mortgage insurance, they're okay with taking a little bit of a higher rate. So it's kind of for buyers that are looking to do that.
So if somebody buys a house, conventional financing, say they put 5% down as opposed to 20, and then 2 years from now they reach out to me and say, hey Chris, what's the value of my home? So then I run the value of their home, and their home obviously has exceeded. Say now they have 35% equity in that home. They may not have 35% equity in the loan, but the value of the house has gone up significantly. So that's something to where they could go in and do a streamline refi and remove their mortgage insurance, because now we can prove they have 35% equity because what they paid for and what the value has increased.
You're exactly right. Yep, you're
Yeah.
exactly right. And then that automatically, they don't have to do anything, no cost to them. That mortgage insurance will come off.
Right. Right.
Yep.
I like how you keep saying I'm right. See that? I'm right all the time.
He doesn't even need me here, guys. He could have just done this with himself.
No, but see, it's good to get from the horse's mouth, man.
It is. Right, right. Yeah, and it's good for me. As you could tell, man, I'm like you. I'm a nerd with this stuff, man. I love talking about it. I really do.
Yeah.
Sometimes I get so excited. I'm on the phone and my boss will be in here and he'll be like, slow down. I'm like, I'm just jacked up, man. I'm excited.
Right. Right. It is. You got to love what you do, man.
You got to. Yep.
So when Mike's not doing mortgages and stuff, what's Mike doing?
Man, a little bit of everything. So, I like to stay active, like to stay fit, like to work out. Getting ready, like I said, getting ready to have the baby. My other passion is coffee. Before I got into the mortgage business, I owned coffee shops. I have those on the side still, and I'm very blessed to have a really, really great team that runs that for me now. Some people that I could really trust.
Cool.
So I could put my full time and effort into the mortgage business, but still do have that on the side, and always been a passion of mine. Back in college, when I graduated college, I went to Costa Rica and went to Peru and visited the coffee farms, and
Wow.
found my own producers and really got into the coffee culture and thought that's what I was going to be doing forever. I will tell you, that's what I thought I was going to be doing forever. Then I, kind of started dating my now wife about 9 years ago, and her father, my father-in-law, was the ran the mortgage company. And to be honest with you, at first, I started getting to know him a little bit, and he was like, could tell that I like talking to people. I went to business school at ASU. You could tell I was a bright kid. And like all mortgage guys, he kind of started recruiting me a little bit.
Mhm.
And I was like, no, no, I don't want to sit in an office and type stuff up. But at the same time, I was thinking about going back to school for my MBA
Okay.
for the only reason being that I missed learning. I wasn't really doing it to further my career. I
Yeah.
miss school. I miss learning.
Huh.
So I kind of said to him, "Man, I'm not going to sit behind a desk." He goes, That's not what this job is. How about you come and you shadow me?" And that's when I kind of went with him, and I was like, "Oh, this is cool. You do
Yeah.
stuff like this. You're
Yeah.
going out, you're talking to clients, you're doing all types of different stuff." So to piggyback on that question, that's how coffee and everything brought me into the mortgage world. Yeah. Besides that, traveling a lot. We go to San Diego often. We have a place there. We're very blessed to have a spot there. I have
Nice.
Padres season tickets. I'm a big baseball guy,
Right
but I'll tell
on.
you what, man, I'm trying to get it all in because I got about a
Yeah.
month left here before the
Yeah.
baby
Yeah.
comes, and I
Yeah.
and I know those Saturday night calls. Hey, you want to golf tomorrow morning? Yeah, no problem. I know those are going to be few and
Yeah.
far between.
Yeah. Yeah. Your life's gonna change.
Life's gonna change, man. I'm
Yeah.
ready. I'm ready, and I'm
Yeah.
excited. And it's a little girl,
That's
and
cool.
I couldn't be
Sorry.
happier. I always thought that I was gonna be, one of those dads. I'm like, if I don't have a boy, I don't know what I'm gonna do. Soon as I found out I was having a girl, man, I was so excited. I
Okay,
can't
don't
wait.
don't don't be that guy that says I'm a girl dad. Just be a dad. Because I hate when people I'm a girl dad, I'm a boy dad. No, you're
Girl
not. You're just
dad.
a dad, man.
No, you're a father, is
You're a
what you are.
dad. You're not well, a father's there at conception, a dad's there every day.
Yes, yes, you're right.
Okay.
Yep, yep,
And
yep.
I
A lot
have
of
that
us have
mindset.
fathers. Most of us don't have dads.
Right, which I had a father, no dad. So that's
Same,
why I
same,
clarify that. Yeah.
same. Yep. Uh-huh.
But I hate when people say I'm a girl dad or I'm a boy dad.
Yeah.
No, you're not. You're just a dad.
You're a
You are
dad.
just a dad. Kind of like
What
girl
did you have a
mom, dog
choice? Did you have
mom.
a choice in that?
No,
Did you make a
exactly.
decision?
Exactly. It's like dog mom,
It's not like you bought a golden
yeah,
doodle, all right?
no,
You
right.
had
You're
a
not.
girl.
Yeah, you have. Yeah, exactly. Just you're a parent. That's it. Don't. I hate that little. It's one of those things that drives me nuts. It's kind of the same thing with I'm a dog mom. Well, you're not a dog mom. You didn't push the dog
Okay,
out of you.
I won't wear my girl dad hat to Broker's Hub
Yeah,
next week.
don't wear
I
the
will
girl.
not wear it.
Don't
I
wear.
will
Yeah,
not.
because I have one of each. So I will tell you right now, the boys are
Yep.
easier,
Okay, that's what
100%,
I've been hearing. That's what I've been hearing.
and it's
And
true.
cheaper, and cheaper.
It's not a matter of now. Cheaper's not. I don't think the cost is relevant because we
Yeah.
can't compare. My son's 24 and in the Marines, and my daughter's going to be 30 and she's going to school. But you can't compare the cost with raising our kids as you have to for nowadays, right? Because it doesn't.
Right.
It's a different world,
Yep.
right?
Yep.
It's you don't like my daughter. Both my kids were born and lived their up to 10 years old or so without technology because it wasn't a
Mhm.
thing. Right? Skylar was still in the world of scrapbooking and developing
Totally.
photos, right?
I remember that.
Then 5 years later, Jake was born. Then all of a sudden, it was digital. It was all his
Yep.
stuff's in Dropbox, right? And he gives
Mhm.
Mickey shit all the time. Where's my scrapbooks? Because Skylar's got like 6, Jake's got none because it just changed, right?
There was different stuff. Yeah, different stuff to do.
Totally changed. So you can't really compare cost wise because it's going to depend on the child, right? Because if either one of my kids were club kids when it came to sports, that's a whole different cost.
Yep.
Right,
Yep.
right,
That
because
travel
when I-
baseball and all
right,
that. My God.
But when I grew up, which I don't, this is gonna date myself, but there was normal baseball season, then there was summer ball. There was no traveling teams. There was no this club type crap. It was when school got out, summer ball started.
Yep.
And then so all of us who played baseball, we went and played summer ball. It was just that. It was kind of like it was a Parks and Rec based thing. But it was still summer ball. Anybody who played baseball during the school year, that's where we gravitated to in the summer. So there wasn't club teams. So that's kind of, you can't really we can't compare costs because there's so many things different now than when my kids were
Right.
growing up, right? And
Yep.
then I have little man and Trip, my grandkids, and they're 5.5 and 2.5, right? No, 2, a little over 2. It's the same thing. Like we tried to get Anthony into football, didn't like it. Flag football, didn't like it. Now our problem was we thought he was righty. He's a left-handed, so that kind of could change
He's
everything.
like, this is why I hate sports.
Right? Baseball too. He's a lefty, not a righty, which we didn't know at the time.
Uh,
So, but he also was
yes.
a little kid. So,
Yeah, and you're right, man. You don't know what they're gonna do. They could love
that's
reading.
the thing.
They
Right.
could love reading. They could love
Yeah.
the club baseball, and you need a
Right.
$1,000 bat every 2
Right.
years. You know.
Yep.
So
Yep.
you
They
never
could
know.
like your daughter may want to be gymnastics, and that's a whole nother cost down the
Yep.
or dancing. So it's hard to say. Now from a cost of raising them, I'm sure it's increased twice as much now from then
Yep.
because of inflation and whatnot. But
Right.
I don't know. Just good luck, man.
Yeah,
Girls
and I
are
hear
hard.
people say that, man. It's like this is more stressful or this is more expensive. It's like it's just like the thing you said. I'm a girl dad. Well, you're ready to have a kid. You got into the position you're in. Just do the best you can and be a dad. Don't just be a father. Be a dad.
Right.
I think that's
Yeah.
the most important thing
I agree.
to learn. And I've learned, and I think guys like us, not that we need a sob story of any kind, but I think
Right.
guys in our position that didn't maybe have a dad, I
Right.
think we're the ones that learn from that and realize I'll do anything I can to make sure I don't put my kid in that position. I think,
Right. And see, here's a funny little caveat with that. So Jake's playing baseball,
Mhm.
and I'm coaching him at home. I'm not I wasn't coaching that team with the other coach, but so we're behind home plate, and he's at bat, and he's not lifting his front leg to step into the pitch. Okay. So me being me, Jake turns around, and I stand up behind the home plate, and I'm lifting my left leg. I'm like, step into it, man. Step into it. And he's just looking at me like, what are you doing? Like you're embarrassing me.
Embarrassing me, bro.
But I'm not sensing that because I'm being his dad.
You're helping him. Yeah.
So
yeah.
on the way home, okay, he's quiet. He's pissed. I'm like,
Yeah,
what's
of
wrong,
course.
man? I'm like, what's wrong? Nothing I get. What's wrong? I'm like, son, you got to remember, man, and remember this, Mike. You got to remember, son, I'm a first-time dad.
Yes.
I have no idea what I'm doing, man.
Tell
Just
me.
just like you're a first-time son. You have no idea what you're doing. Right. So did I embarrass you? Yeah. And then he let it all out. And I'm like, okay.
Bad. I
my
didn't know.
bad. Right. I will never do that again. I will never call you out in a sporting event again. I didn't know. I was just trying to help you because I saw you weren't taking the step.
Yeah.
And we practiced taking the step in practice and at home. And I just wanted you to be able to step into the pitch and drive the ball. So he understood then.
Yeah.
And then I understood then. But in the moment, I totally just embarrassed the hell out of him. But that stuck with me and it stuck with him that, yeah, I'm a first-time dad. I didn't have the examples I had were neighborhood dads, but they weren't my dads. So they weren't there 24/7.
Right.
So if you find yourself in a conundrum with your daughter, look, I'm a first-time dad.
Yeah. Yeah.
Cut me some slack.
I've got a lot of unsolicited advice, but I'll tell you what, man, that's one I'm going to remember.
Yeah,
And not only to remind yourself that,
Yeah.
but once your kid's old enough to remind them that, hey, my bad, man, it puts you on the same level.
Yeah.
It humanizes you. It makes you,
Yes.
hey, man, I don't necessarily know what I'm doing either. Help me out.
Right.
Help me out. How did it make you feel? Shit, my bad. I didn't realize that,
Right.
So
Because you
I love
don't.
that.
You
I love
don't
that.
because you love the child.
Mm-hmm.
And you want to see them succeed with every ounce of your body, right?
Yep.
So
Yep.
and then fast forward, on his 8th birthday, he actually hit a home run, and I didn't say shit.
How's that?
He hit it. I saw it leave the bat, and it went into the outfield, and it hit the outfield. And by then, he was halfway between first and second. And I was watching the ball. The kid in the center field didn't grab it, and it ended up rolling to the fence. So by the time they were throwing it back in, he was already around in third. I was like, "That's the greatest thing ever." And then I marked it on his I signed the baseball and put it in a container because I was like, this is the coolest thing ever, man. This is your first home run. So, that was kind of cool.
That's awesome, man. That's so cool. Great advice. I love that.
Yeah.
Very cool.
There you go. Anything you want to share with the real estate guy listeners before we wrap this thing up?
Nothing, man. I think we went over a lot. All I would say, the biggest thing for people looking to purchase is don't get overwhelmed. Chat with someone like Chris or I, man. We're happy to chat with you. We're happy to work with clients for a month, for 2 months, for
Yep.
6 months, for a year to
Yep.
get you prepared. It is overwhelming. It's the biggest financial decision of your life. We don't consider ourselves, specifically me, I'm not just a lender. I consider
Mm-mm.
myself a financial advisor. And most importantly, I am never, ever transactional with this. I'm working with you through life. Even once we get you into a home, we're following up with you every 6 months. We're seeing if we can refinance to get you into a better program. As you could see, I'm very passionate about this, man. I love doing this stuff. I can nerd out on this. I get super excited. So you call me. You're never wasting my time. You're never wasting Chris's time. Call us, talk to us. We're happy to help you, I think. So that's it
That's
for
one
me.
thing I always tell everybody. That's one thing I tell everybody. There is no stupid question except the one you don't ask. And if you're not asking it, I can't read your mind, so I don't know where you are. I don't know what you're struggling with. So don't be afraid.
Yeah, I'm glad you said that because I will
And
end it
that
on
carries
this,
its weight.
Chris. I will end it on this because that's a great thing to say.
Okay.
When I bought my
Okay.
house in 2015, this was before I was in the mortgage business, and I was using a buddy of mine that was a lender, and he kept saying stuff to me. Hey, your DTI is this. Hey, blah, blah. I had no idea what he was talking about. I was embarrassed to ask
Yeah.
because I
Yeah.
felt dumb.
Yeah.
A buddy of mine kind of screwed me over a little bit because I was embarrassed to ask these questions. Now go
Right.
above and beyond. I should have asked so many
Yeah.
questions. I should have done some more. I should have had clarity. There are no stupid questions ever, 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 ever. Ask us wherever you need to.
Yeah. And then the other thing we'll wrap up with this, the same concept. You're never bothering me.
Never.
Like I get that all the time. Like you're not bothering me.
Sorry,
This is what I
bothering you.
do.
No, you're not. This is why I gave you my cell phone number.
Exactly.
Yes,
This is what
exactly.
I do. You're not bugging me. If you're not asking me questions, I think you're fine.
Yes, exactly. Exactly.
And you're not fine because you're stressing out, man.
Tell me you're not. Tell me you're stressed. Let's share it together.
Exactly.
Right on,
All right,
Chris. Well, hey, thanks for having me, brother.
You're welcome. That's Mike Atwell. How do people get a hold of you?
Atwell at eurekamortgage.net. I'm going to throw my personal cell out there. You guys call me anytime, 602-476-4773. Mike, the mortgage guy, on Instagram and TikTok.
There you go. I'm Chris, I'm a real estate guy. Until next time, see ya.
Later, buddy.